Hey everyone, another brief trading tutorial, and in this tutorial we're going to learn how to trade broadening tops and bottoms, and it's really just an introduction to trading broadening tops and bottoms. You'll often hear it being called the Megaphone pattern, and typically how they broadening top is bearish and a broadening bottom is bullish. So with that said, enjoy the video. If you do, remember to smash the thumbs up button, subscribe to the channel and hit the notification bell, and you'll get notified every time I'm going live, trading live every single market day before the market opens. I look forward to seeing you then. Okay, so today we're going to be taking a look at how to trade tops and bottoms, broadening tops and bottoms. Okay. So a broadening top or bottom is simply the market broadening its range over time. So what I mean by this is that the price, the price is just simply getting wilder and wilder and wilder. And using a couple of trend lines that are getting wider and wider. Okay. Now, a broadening top, as you suspect, it means it's at the top of a move and a move higher, and it's typically a bearish thing. And a broadening bottom, which is a little more rare, is at the bottom, and a breakout normally means a positive thing. Now, some of the patterns that you learn from me have built-in measuring sticks of where you're going to end up. These patterns don't necessarily, okay? They just signal a potential trend change. So what we see in this type of pattern is there's a lot of certainty. Like over here, there's a lot of certainty in the upside, and things just get wilder and wilder and less certainty comes into the market. You know, some people are hanging on and want to take their profits, and once we break through this trend line, then it shows that we're really getting ugly out there, and we'll sell off. Some people try to trade for the length of the pattern. That, to me, historically is a bit difficult. Some people will try to trade for the middle part. As a general rule, the best way that I've found to trade these is to simply take the break, look for the next support, or in this case, resistance level. So over here, on Visa, you can see that we have been rallying for some time, and then the market really started to get volatile, choppy. And once we broke through this downtrend, the supportive downtrend line, you can see that we really unwound. And in fact, we end up taking most of this move. Eventually, I would also point out that this line extends out to be resistance later. Okay. Easy thing to grasp because the market have been reliable. Now, all of a sudden, it isn't. So at first glance, you may not see it, but this apple on this chart, it's a huge one. You can see that we're really starting to widen after dropping. And this shows that, you know, we try to rally, and then there's even more confusion, and then we break out. Now, this is one of those scenarios where you could trade the beginning of the cone or megaphone, if you will. And sometimes you'll hear it called a megaphone pattern. It's the same thing. And that would have reaped the benefits. This was such a huge level, though. This was literally like $18. So that's a massive target. It's unlikely that you're ever going to do that during a day trade. I should say you rarely will get that type of move. But as you can see clearly, we were selling off and people became less and less confident in that bearish position. Eventually, we took off to the upside.